Donald Trump's 90-day pause on tariffs hikes has acted as a boost for Indian markets. The BSE Sensex ended with a jump of 1,310 points today, or 1.77%. The NSE Nifty also rising by 429 points. How is all this going to play up? How is India looking at this tariff war between China and the United States? I'm joined by Nilesh Shah, member of the Prime Minister's Economic Advisory Council and also Managing Director at Kotak Mahindra Asset Management. Appreciate your joining us, Nilesh. The market's recovering strongly today, as have most global markets after Donald Trump announced that 90-day pause on tariffs. But is your sense that we are heading for really uncertain times in the next few months?
Undoubtedly, we think there is volatility ahead. We haven't seen the last word on the tariff. There will be counter moves by China and then by US. The world will remain volatile as there is a lot of uncertainty about the future.
What, according to you, though, is the trigger? Is it simply India now carefully watching how this Indian markets watching how the US-China tariff war plays out, that until this war is resolved, the markets will remain uncertain? Is that the sense you get, Nilesh?
Undoubtedly, markets are looking as to whether India can benefit from this trade war or not. As China tariffs are at 145%, practically all exports to America will come drastically down. And America will still consume those things. They will require alternate supplier. Can we be that alternate supplier? The second eye will be on China has large manufacturing capacity. They will need a market to sell those goods. Will that be India? How proactive India will be in ensuring that China doesn't dump those goods in India. So market will be very keenly watching both opportunity as well as the threat.
But are we now looking, therefore, in the near term at least, at a market which is not going to see a rally across the board, but specific sectors, specific companies that may in some way believe they benefit from a US-China trade war? Is that the sense you get, Nilesh?
Very well said, Rajdeep. I think there will be domestic themes which will get a preference. For example, consumption should get a boost as about 1 lakh crore of tax rebate comes into play from 1st April 25. April salary, when it reaches people's pocket, they will see lower TDS. There could be potential petrol and diesel prices cut at the pump level. As interest rates have been cut by RBI by 50 basis points, EMI burden will ease off and consumers can be spending that money. And finally, somewhere towards the end of 2026, beginning of 2027, 8th Pay Commission will put money in the pockets of government employees. All these things will give boost to consumption, which will be reasonably immune from the tariff war. So I believe consumption kind of theme will get supported in the market and will be an outperformer.
But for now, at least, Nilesh Shah, the consumption spike that the government is hoping for hasn't taken place. Private investment also hasn't quite got boosted post-budget. Is it simply because even private investors are just watching very carefully what happens in this trade war? There are fears of a global recession, certainly a US recession. Are investors playing simply a wait-and-watch game at the moment?
Undoubtedly, the private capex will get delayed further with this kind of uncertainty. Today, people who have opportunity in US will also be careful in spending because they may have supply chain linkage to China. All our exporters will have to prove to US authorities that they are not rerouting products made out of China to America. Second, there is also technological change happening. The person who put up the first lab-grown diamond machine is now looking at losses because the cost of making lab-grown diamond has come down dramatically. The first mover advantage there become a liability. Between the global uncertainty and technological changes, it's quite likely that private capex will get pushed a little bit because of these uncertainties.
My final question, therefore, to you, Nilesh, is what is your suggestion to market traders and, dare I say, retail investors? Should everyone just lie low for the next few months and be very careful about their investments?
Undoubtedly, if you are a trader, it's better to lie low and stay out of the market rather than getting caught in this whirlpool of volatility. If you are investor, then keep on buying during the correction, but don't be in a hurry to deploy. Give preference to quality over momentum. Give preference to reasonable valuation over expensive valuation, and domestic theme over international theme.
Nilesh Shah, for giving us a sense of how this is all playing out on the markets. I appreciate you joining me. Clearly, we'll be watching what happens in that US-China trade war very closely in the weeks and months ahead.